on this point of time, you will learn the basic of this professional trading, and if you learn the basic of the professional trading, that means you are going to make the read all the chart, which is really essential for the traders. And if you are traders, that means that you have to learn very carefully all the chart that is present by the market, because every chart is not to give you the right result, but reading the right chart and right wrong chart, it will make you more aware about the market. What can be happen in future if I invest all money into that? What can be happen if I am not able to take and withdraw my all money from the market? Then what can be happen? The major loss can be happen by you not following anything else. So have a look at this disclaimer. This is now have a look at this introductions. This is the introduction, basic introductions. I have explained everything else from the basic point. Now this is a shareholder. When you buy the stock, then you will become the owner of this company. When you become the owner of this company, that means you will end up getting all the shares and you will end up getting all the profit from this company. If losses happen, that means will be your hand. So let's take a look at the example of Apple. Total Apple share, which is almost that. This is the total Apple share which is available on a stock market. You can trade in that shares. You can invest and buy from these shares. This is available because of that. And the price of this share, which is almost $193, and you have to invest at least just for buying one share, which is almost $193 just for buying one share. If you multiply both of them, that means they will end up making $3 billion company, which is great for the Apple. Now have a look at this data. This data tells us about in the Nasdaq there are more than 7,000 firms. That means 7,000 companies are listed in the Nasdaq, in a New York exchange. That's why the investor and trader buy on sale on the globally. They can buy at the low cost and the sell at a high cost as they understand it. If you are a smart investor, then you can play a good role. That's why you will end up making a good profit from the market. This is the thing going on in the market. Now have a look at this data. Going in the long term, when you buy at a low and sell at a high, that means you will make a money which is almost 150 rupees per share. This is the basic price. This is the chart which represents the position here. If you buy your position over there, that means you have invested, you are taking a trade over there, and then when you sell from here to here, your price, when you look at this data, this trend is going upside, keep upside. That's why you just withdraw all money at this level. That's the reason why you have end up making this amount of money as per share. This is the $150 in one share profit. Now this is another short selling, how you need to take your shorts, because in short selling you have to be short first. You have to short first. That means you have to sell first. Once you sell first at the moment, that means you have to be buy at the later. And you will end up making $150 per share by following this chart. And if you really interested in, and you can make a good money from that chart. So in this summarizations, we have described everything else. So this is the calculation of the result, how much returns you have just making from your capital. This is the capital if you buy 100 share of share which I have taken from the market trend app, and you can take over there. This is the investment you have made over there, but you sell all your positions over there. That means you are end up getting 7,000 profit. ROI, which is almost 24%. If you have a trade that generated almost 24% in just one trade, that means you are doing great. I have just taken a trade, and then I have my highest profit is almost 11%. You can if you become expert trader, you can reach that level. Might be happen with you, because you have understand what's the real essential thing you need to do in the market. That's why you can make this amount of profit from the market, which is easily available. Now, using the leverage or magnification returns on investment, there's leverage thing. If you are taking leverage on the 50% on your investment, that means you are end up making 48% from your returns from your investment that you have just invested into the market. This is almost 48% return it's generated by the profits. Now, it's just the same thing that happen here. You have taken also 50% of margin. That means you will end up making 241% of returns from there. That's great. You need to think about that. Now, having the just look at this. Using leverage on a magnification result, you might be getting so hard because every time you take leverage, that means you are taking a loan against your all the investment that you have made into the stock market. That means if you lose your trade, that means there is a higher chance you will end up losing all your money as compared to the normal trade. You will lose higher amount of money from this market. So that is why the people say this take this management. You need to take loss very limit, because every time when the losses is hit at the chart, you have seen this is a chart which is represent over there, and when you take your loss over there, that means you don't have to worry about this chart, because you end up ending from this chart at this moment. That's why you are not able to lose your all capital from here. There is a reason why the people are not making money in the market, because of they end up losing them. And if there is no good terrible market in the market, there is no such thing which is good and terrible. People make them good or terrible by doing the wrong thing in the market. There is no excellence or poor thing and a stock in the market. Every poor stock can be make a good return, but people don't understand. They don't take educations properly from the expert. That's why they end up selling all the stock whenever they fail. They don't understand why they are failing, what is the fundamental of this company. They buy stock, they don't buy this company, they don't buy the business. That is the reason why they end up saving all the money into that. So have a look at this chart. This chart is showing about the determination of the directions as the price is going up. The fundamental of the earnings is that. That's why I have to say, if the business is good, that means whenever the chart is going down, you need to be just add more capital into it, just because of the business is good. Once the thing is good, then you have to make more money into it, because of the fundamental is all clear, and the high valuations and high growth is equal to the share increasing in the share price. When the share price is increased very significantly, then you will make a growth and you will make a high profit from that. This is the thing which has happened a lot from the market, and in the market, and the low growth and the low valuation means the company is not being good. That means the drop, it may be a drop in future in share prices. And when you look at the medium and long term for investment, then you need to be concerned about the little bit about what is the real fundamental and where I invested. If you invest in the right company at the right valuation, that means you are not losing your money on a long term or medium. Now, how you can focus your directions for the stock market? This is the moving average, which indicate really how you take a profit from the market, and this is the indices, and there are different indices which is compiled into. And if you invest all the money by using that candlestick pattern and by price trend, and you will maybe not get the right kind of loss, because of you are just applying all the thing at the time. And whenever the price and trend is going down, you are getting more and more alert. This is the right time to sell your stock and exit from your stock. And that's happened at this moment. You have seen this is the stop loss you need to take over there. Once you did, that means there is no such chance which can affect you, which can affect your capital to go down into the market, and you will end up making good returns as compared to another people, those who are not able to make good returns. Now, when you look at this technical analysis of this market and cycle, then you will see this is the downtrend which is keep happening over the last few years, and this is the support level which is getting, and this is keep going upside and keep going downside. And once this is happened, and 2 and 3 times is keep moving upside and give you a massive resistance. Once this try to give you a massive resistance, that means you need to take more positions to that, because every time when the stock is trying to go up, the stock market trader and the traders is trying to sell your all position from the resistance level, and the resistance level is quite low, because of the all the traders are trying to sell all their position at this moment. Whenever the company is doing good, that means there is a higher chance and higher probability company is going to give you a massive breakout just like that, and you will end up making a high return as compared to another thing. So have a look at price chart, which is that uptrending and positive sign. Given the positive sign, and there is greater higher and lower lows, keep making that. And when you look at this long-term uptrend chart, buying on a dip and keep buying on the dip, because of you have just applying your indicators. Whenever this company has been loosely interrogated, that means you need to exit immediately from that. So this is the uptrend, which is momentum is happening, and this is the long term chart pattern. And whenever the chart pattern is making a big candlestick pattern in downturn, then you need to be alert and about that, and just read about the company, what's going on, and how this company can be affected my money if I invested my money into that. Because every time when the company is getting this type of candlestick, that means companies going to get more and more burned out from this market. That is the reason you have to take a stand over there and then try to read their balance sheet as much as possible. So this is the downtrend. Again, this is a chart another downtrend. If you are sorting your position from here to there, that means you will end up making money. So there, the smart investor is make a good returns from any market, whether it is a downturn, whether it is an uptrend. It doesn't matter. It matter only their mindset. If the mindset is good, that means that they will make in a rally market and a downturn by short selling their all the shares. If this man is selling all the shares from now, that means if this man is selling all your shares at this point of time, which is almost 72, and getting all their money from here, that means they will end up making almost 30 to 40% of return. That is the reason why I always say a smart investor can make money from any time. It doesn't matter the recessions happen, it doesn't matter what is happening in the economy. And the thing is, which is you need to know about, the rallies keep coming and go. Whenever the consolidation is happen, that means there is a higher probability that no one is gonna be make money, whether it is trader, whether it is investors, and anyone cannot make money from this consolidation phase. So try to avoid the consolidation phase. Whenever the downturn, please short your all selling, but it is a free as compared to the uptrend. So please remember that whenever you short sell, please remember and manage your risk properly by sorting your all sale. Now have a look at this chart. This is the consolidation phase. There are two types of consolidation phase. One type of consolidation phase is small, just give you a 1-2% of returns. It is not great. But this is the big consolidation phase, which is keep going upside and downside. And in this pattern, you will see this is the point of time from here to there. It will give you almost 20 to 25% return from there. And if you understand the basic of this chart, that means you will buy over here and sell over there, and you will end up making almost 20 to 25% return. That's good. You can make it, and the price can be either the big and it can create a new high over the next period of time. That is why the new downturn is consolidation phase. Now have a look at this chart. Instead, keep trading out there and upside and downside. Just keep getting here and end up making a high breakout from the end of this point, because the sorting really is almost give you massive returns once this, as much as consolidation phase is very higher, that means there is a higher growth for this in this stock. There is a higher chance this stock give you massive returns from there. This is the same thing happened with that stock.